All right, we're looking at this question called a RIC group. I just thought I'll quickly finish it and then we'll go on to the critique question. All right. Now, one piece of advice for you in the exam, when you look at the exam question, yes, I do admit it can be a little overwhelming, but you've always got to remember that you're just there to collect the marks. So when you're doing a particular question, try and budget to go for at least 70% of the marks. And if there is still time remaining for that particular section, so let's say that section is worth 10 marks, which means that there's about 15 minutes for you to do work in that. So after 15 minutes, no matter what happens, just move on and move on to the next thing. Yeah, next part. The aim here is to make sure that you complete the whole paper, the full paper. Make sure that you don't do too much in one particular area and then leave another area undone. I have had several comments made by students after the exam that they regretted that strategy very much of trying to sort of complete question 1 and complete question 2. And then they find out that question 3 was actually quite simple. Yeah. So when you're starting the exam, just quickly flip through the questions and see what the questions are. You can see them very quickly, whether it's paper-based or in your CBE exams. The questions are all on the left-hand side panel. You can see that very clearly. Have a quick look, but try and stick to the timing. It really requires discipline. Okay, so you're allowed to keep a watch with you, a timer with you, so just stick to the time. All right, we're doing this question here called a RIC group. So this one, the company has got it says here it is 1 July, 20x5. The year end is 30th September 20x5. The company is a listed company and it offers an internet television network. I'm sure you've already tried out this question before. And when you go down here, the exam question in part B says, using the information provided in Exhibit 4 to evaluate the extract from the component auditor strategy, commenting on the audit strategy responses and ethical matters relating to the issues identified, and there's 10 marks inside there. All right, comment on the audit strategy. Make a comment. Don't forget to make a comment. And here you have got this subsidiary called Darrell. It's a foreign sub which is audited by a local firm called Negan Associates. And then down in the question here, they tell you that Negan Associates provides audit service to Darrell. And Darrell is one of the group's largest subsidiaries and it's also listed in its home jurisdiction. And those are its assets. So if you wanted to calculate significant component, you actually could. And it was acquired several years ago, so the goodwill is not a new figure. It was actually brought down. Okay, but we're not looking at the impairment part of it. So let's go and have a look at the extract from the component auditor strategy here. So there are 3 points below. They're giving us 10 marks. So 3 points below are an extract from the audit strategy prepared by Negan Associates in relation to the audit of Darrell Cope. Other sections of the audit strategy include audit risk assessment, have been reviewed by the group audit team and are considered to be satisfactory, so you don't need to consider them. The first one, materiality. Internet services in the country have been subject to considerable disruption, and as a result of it, a significant number of customers have cancelled their subscriptions. Remember, these guys are into some television thing. Yeah, television subscriptions like Netflix. Have cancelled their subscriptions and the company is projected to make a loss this year. So that was an issue identified by Negan. So the strategy, they said materiality will be based on total assets for the first time this year due to significant reduction in profit and revenue. Based on 1% of total assets, the materiality is determined to be 1.4 million. In the previous year, materiality based on revenue was determined to 1.2 million, which is kind of weird because if you have a look at it, the company is loss-making this year and the materiality level is higher than when the company was profit-making, which is so weird. The risk is always higher when a company is loss-making as they try and minimize the loss figure. So rightfully, the materiality level should be lower. So what are you going to write here with our observation? Remember, we've got to write the answer. Evaluation of the audit strategy, then we've got to make a comment. So here, they are, I'm just going to copy paste that here. I'm not going to write it out in full, just take up too much time. So the observation here is that materiality will be based on total assets, and it amounts to 1.4 million. This is the first time that they're doing it. And then we're going to say that, make a comment. So now explain why it does not make sense. This does not make sense. So we're saying that it does not make sense. So we're evaluating the component auditor strategy. So now we're going to think about what should Negan have done. So Negan Associates. This is what they should have done. We are looking at the work that they've done to see whether they've actually followed the rules in the auditing standards. So we're saying that it does not make sense. Why it does not make sense? Because the materiality now is higher than when the company was profit making. So really, this is not how they should have assessed materiality. So when you're talking about setting materiality level, what is the objective? Something like that. You don't have to follow the words exactly. I mean, everybody writes it differently, right? The only thing here is that I'm putting the observation based on the question. I'm making a comment. Then I'm saying what they should have done because we are dealing with an audit procedure. Okay? Now, I just want to deviate slightly. Okay? Now, I know I put here, this does not make sense and all that. Okay? I just want to deviate slightly. Now, supposing this exam question was not on audit procedures, or in this particular case, audit strategy. What if this exam question brought in something else that had to do with maybe the finance director saying something? So maybe, let's say, the finance director decided that intangibles, that all maybe R&D will be capitalized. He's come up with a new accounting policy. All right. Now, because we're dealing with the finance director, it is also critiquing, just like here. The only difference here is that we are trying to criticize or evaluate the work of the auditor, which is governed by auditing standards. But here, if the exam question talks about what the finance director is doing, then what we do here is also another exam technique where we bring in the observation, the story, down here, Then again, we're going to make a comment and say, this is not right. Then we're going to explain why this is not right, and now what we need to do. Okay, so I know it says this does not make sense. Okay, I know there's a comment here. So we use this exam technique of OCWN whenever you need to exercise professional skepticism. And when you exercise professional skepticism, I mean, if you have a look at the definition of it, it says having a questioning mind. Yeah, that means when people tell you something, you're like, what, really? Okay, and then being alert to circumstances that might indicate the possibility of fraud or error, and a critical assessment of whatever evidence that you are giving me. So when you look at OCSOTN and OCWN is in a sense similar because we're trying to criticize somebody. Yeah. The only difference is that OCSOTN is for evaluating audit work. And skepticism is when the client does something and we're like, really? Should you be doing that? Okay, so we're using that. So we're saying observation from the exam question, make a comment, this is not right. Yeah, and then you explain why this is not right, because IS 38 says something. Okay, and so now we have to audit those figures to make sure that research and development has been identified and separated out, and then the the development costs, you have to make sure that it actually fulfills certain criteria like technical feasibility, commercial viability before you actually capitalize it. Okay, so I know here we've got a comment, and I know here we've got a comment. The only difference here is something happening with the auditor, and here is something happening with the finance director. That's the only difference. Are we okay? So we just leave that for now, yeah? Just in case you were you wanted to find out more about that, because I use both those acronyms as well. Okay, so coming back here. So this is a materiality, does not make sense. Why? Because what they're doing now, the materiality is higher than when the company made profits. So they should have actually done the right thing by assessing the risk and then setting the materiality after that. After all, you've got to use judgment. So obviously here, the objective is to ensure that adequate amounts of work are done, because if your materiality level is too high, then you won't be able to identify. I mean, you won't have done a lot of work. You would have left out a lot of work. So now we're saying, so therefore here, is there any, here, this one is an audit strategy. Have they already executed the audit strategy? No, they haven't. So therefore, you don't have to bring this part in. Let's just color that. You don't have to bring that part in. You don't have to say, therefore we are unsure, because they haven't even started doing any work. A lot of the time, the quality control questions are already at the end. Maybe you are the engagement quality control reviewer and you're doing the work. So a lot of the work has already been done. Yeah. And then you can turn around and say, therefore we are unsure whether assets exist or not. But at the moment, we are evaluating the audit strategy. So we are not going to bring that in here because they've not done anything yet. So now what needs to be done? Remember, this whole thing here is about calculating materiality. So therefore now the group auditor here, what do you think they should do? What do you think they should do? Now do what? Remember, it's talking about materiality. I'm the group auditor and Negan Associates, they're the component auditor. What should the group auditor do? Can you put down your actions here? Should set the materiality. But use the technical term here, which is component materiality for Negan Associates to use. So for doing all of that, we have got 2 marks. It's not very difficult, is it? Yeah? All right. So let's go to the next part here. Are there any questions? No, we're not so much to reassess maturity level. We're not asking them to reassess because we're talking about a group audit. And in a group audit, the group auditor is the one who needs to calculate component materiality. They can calculate their own materiality. So let's say, for example, if the component materiality is 1.7 million, then we will turn around and say, okay, go ahead and use your 1.4 million. But I don't think we're going to say it's 1.7 because it's loss-making this year. All right. And when there's loss making, there is a lot of pressure on management to try and make sure this loss doesn't become bigger. Okay. So in order to make sure that we do an adequate audit, maturity level should be brought down lower because the risk is higher. The pressure on management is there to try and doctor the numbers, manipulate the numbers, creative accounting. So we bring the maturity level down when the risk is higher. So ISO 600 says that we should set component materiality for the for Negan Associates to use. All right. So here, the reason why I brought the skepticism in, actually it's got nothing to do with that, but it's the way of thinking is exactly the same. The only difference is that this one is the work that has been done by the auditor, either our own audit team or in this particular case, the component auditor. And we use OCWN when you're dealing with client staff. And the client, usually the finance director, because he's the one who's usually calling the shots on the area of financial statements. Yeah. So we're looking at that. So I repeat, this one is an observation. Make a comment. This does not make sense. That's ridiculous. Okay. Something like that. And then you explain why it is so. And now what you should do, because if the client is doing something ridiculous, don't tell me you're going to sit down and do nothing about it. So make sure that you put down the now what do we do? Exactly the same as this. Okay, so they're sort of similar in idea, just slightly different. Acronyms used here. We've got these 2 points here because our work is guided by the auditing standards. That's all. Okay, let's go to payroll. So from 1 October 20X4, what's our year end in this particular question? I think it's 30th September, I think. All right, so from the beginning of the year, payroll accounting services are provided to Daryl by Negan Associates as an additional non-audit engagement. And that's kind of weird because I read somewhere here that Daryl is listed. And if it is listed, then how can its auditors provide that service, which is kind of weird. Okay. So what is the plan procedure? What does the component auditor say? We're going to agree the total payroll figure estimated to be 6 million from the P&L to the reports generated by Negan, and no further audit procedures are necessary, which is ridiculous. Why? Because we're talking about payroll. Payroll is usually a material figure in the financial statements, unless, of course, your whole company is run by robots. How can that be? We're talking about payroll. Payroll is a transaction. It's found in the P&L, and if that's the case, then we need to audit it using the assertions relating to transactions, which is COCA CP. How can you just because you prepare the report, you forget about the assertions? The assertions are compulsory. They are found in ISO 315. And in ISO 500, it says that we have to obtain sufficient appropriate audit evidence for every one of those assertions, especially if the figures are material. Okay, so let's see what we can do here. First, let's deal with the this one here. There is this part here that relates to the ethical code. Negan provides payroll outsourcing to Daryl. Okay, so if we're dealing with an ethics question, then the first thing that we've got to do is put down the threat. So there is a self-review threat, because you'll be reviewing your own work. How many marks would you get if you just put that down? How many marks? 0. Why? Because you did not explain the effect of the threat on the behavior of the auditor. So I'm going to say in that, and I usually put my in that's in capital letters just to remind me to explain the impact on the behavior of the auditor. In that. Okay, so that would be 1 mark for the threat, provided you have explained the impact on the behavior. The next thing that we're going to do is we're going to talk about the severity of the threat and the ACCA code. Hang on. Let me just borrow this here. I'm just using the table here just so that we can revise the exam technique. And the exam technique that we're going to use here is threat, severity of the threat, the ACCA code, and the safeguard or the action. So now the severity of the threat. Then what does the ACCA code say about it? So that is what the ACCA code says. So that whole thing is actually 1 mark. The severity is actually linked to the ACCA code as well. So you're not going to get a separate mark for that. Okay. So in this particular case, if it's already prohibited, are you going to have a safeguard? No. So there'll have to be an action. So here to Daryl. Okay. All right. So here, these are the planned procedures. So let's go and have a look at how we can write that. Okay. So what happened here? What happened here? It says from October, from the beginning of the year, the payroll accounting services were actually handled by Negan Associates. All right. And the work done here, okay, so here, just taking some shortcuts here, okay, is to agree the total payroll figure to the payroll reports generated by Nikan Associates. Okay, so that's what happened. So can you tell me what comment you're going to make? Oh, I've got a question here. Why the ACCA code and not the iceberg code? Well, ACCA code is based on the iceberg code. The reason why I bring in the ACCA code is because a lot of my students were actually in my AA class, and with AA, the examinable document is actually the ACCA code. So it really doesn't matter whether you say the ACCA code or the iceberg code. The ACCA code is in full compliance with the iceberg code. So that's fine. Yeah, you want to use the iceberg code is fine. I'm just carrying on for the benefit of my students who are my AA students. That's all. All right, so it really doesn't matter. Okay. And both the iceberg code and the ACCA code are in the examinable documents, by the way. So what comment are you going to make? This is insufficient. Excellent. All right, make that comment. Remember the exam question says make a comment? Okay, so I make a comment. This is insufficient. So now you need to explain what should have been done. So I'm sure you know all the assertions by heart. Payroll is a P&L item, therefore we're using COCA CP. If it is a account balance, then we're going to use CARE CP, C-A-R-E CP. The CP is exactly the same for both. All right. And what will be the objective? Okay. Now, because this is only a strategy and they have not started doing anything yet, I cannot bring anything inside. Oops, anything inside here. All right. But now what should be done? Now what should be done? Now, what do you think? They are not planning to do that, right? So earlier we said that this is what they should do, and they're not doing that. So now the group auditor something like that. So I get another 2 marks inside here. On this area here, how many marks would you get? So there will be 1 mark for the threat, 1 mark for the ACCA code, and 1 mark for the action. So we've got 3 marks inside here already. And then here we've got 2 marks inside here. So the 3 marks here are in relation to all the marking scheme relating to the ethical code. So that one doesn't change here. So here is 2. All right. Okay, so moving down here, then you have got the sale of the property here. So here I'm going to deal with it very, very quickly. The story here is that Daryl sold a small unused building located on the coast to the group CEO for $50,000. The amount is still outstanding for payment, and the group CEO is planning to use the property as a holiday home. So selling something to the CEO is a related party transaction, right? Okay, so confirm $50,000 is included in receivable. That's okay. No further audit procedures are considered necessary. Do you think that's right? I mean, it can't be right because it's in our exam question. So, why is it not right? Why is it not right? Because it's material by nature? Because it's a related party transaction? So what if it's a related party transaction? So what? Talk to me. So what? Do you remember this? Oops. So this one, fun car. Why is fun car so important? Because it requires it's an area of high risk. It's an area of significant risk. Okay, then how can an area of significant risk that requires special audit consideration has only got that part inside? So it really doesn't make sense, but you have to write out your answer. So remember, we're critiquing the strategy. Who's that CEO? Okay. So make a comment. Make a comment. What comment would you like to make? I don't think it's fraud. It's just the related party transaction part here. Okay. Make a comment. This is insufficient. Why is it insufficient? Why is it insufficient? You can write your comments in the chat. Hello? Anybody home? Why is it insufficient? This is a related party transaction and is an area of significant risk. Okay, so your fun card came in handy. Fun card is really important. Okay, so I hope you remember that. So, what should have been done? Okay, we've already explained the part that it's an area of significant risk, so we don't have to repeat ourselves. They should have devoted special audit consideration. Okay, i.e., probably detailed testing of that amount. So, objective. Hello. we are doing this question called Rick. Yeah. Okay, is material by nature, so it must be disclosed. No, true, it must be disclosed, but we're talking about the audit strategy here. We're talking about how the component auditor has approached the audit. Please take note that we're not doing an audit report question. If you're doing an audit report question, you're right, you'll talk about material by nature. But here we're dealing with an audit procedure question. All right, so slightly different terminology. Here we're talking about the work that we're going to do. So, the work that we are doing. So if you're dealing with the work, then we have got to focus on the auditing standards. So the auditing standard says that a related party transaction is an area of significant risk. It requires special audit consideration. Okay. So what would be the objective here? Okay, I think that's enough. All right. It's a sale to a related party. So here I'm not going to include that part about therefore unsure because they haven't even started to do anything. So now I'm going to go on to the now. So what would you like to do now? Okay, Melissa is saying objective is to ensure that any material misstatement is identified. Well, in this particular case, it's more to do with the disclosure, but it's also an item that is high risk because all related party transactions actually need to be authorized. So now what do you want to do? Every audit procedure is actually 1 mark. So now what would you advise? So that would be one thing that would be very important. Yeah. All right, so what else? Something like that. All right, so when you are critiquing an audit procedure or evaluating audit procedures, our evaluation has to always be in line with the auditing standards. So OC-SOTN is just an exam technique so that you are able to write more than 2 lines. All right, so don't get confused between OC-SOTN and OCWN. OCWN is for professional skepticism, where usually it's the finance director who ends up doing something. All right, so with that, we have finished this question.